Welcome to the Oil and Gas Future Forum, where we have gathered some of the industry's top minds to discuss the most pressing issues of our time. We are on the precipice of major change as we look ahead to a recovery after this historic and turbulent year. Throughout the course of the three panels today, we will explore the shifting cybersecurity landscape and the challenges and opportunities during and post-coronavirus. We'll look at the relevance of OPEC in the 2020s, and of course, we're going to consider one of the biggest challenges of our time, the energy transition. The first discussion of the day will be about OPEC's role in the 2020s, so I'd like to welcome all of our viewers and encourage you to use the chat as we wait for our speakers to dial in. We're starting the conversation today with a very big question. Will OPEC remain relevant in the 2020s? With the emergence of the United States as a major player in the global oil and gas market, and following the current market crisis, the industry experts that we have today will discuss the role of the Organization of Petroleum Exporting Countries in the 2020s and beyond. We have some esteemed guests with us here to explore this subject today. We have Dr. Mohammed Al-Sabban, who is a former senior advisor to the Saudi Energy Ministry, Dr. Sarah Vakshuri, who is the founder and president of SVB Energy International, Ole Hansen, who is the head of commodity strategy at Saxo Bank, and Herman Wang, who is the managing editor for OPEC and Middle East News at S&P Global Platts. So thank you all for being here with me today. I'm eager to hear your thoughts on this topic. So let's just dive right in. So obviously it's been an extraordinary year, a little bit of a turbulent year. So Ole, if you could tell us in general, if you could give us a brief recap on the major oil price and supply-demand movements in 2020.
Thank you very much, Carla, and thank you for having me. Well, what a year it's been. I think we already forgotten that back in early January, we were trading, what was it, around $72 on Brent crude, only to collapse all the way down to $16 within the next few months. It's obviously been a dramatic change in the demand side that has triggered this major collapse in the oil price. And the pandemic is still with us, and the pandemic was a driver back then, and it's still the one that is really preventing demand from recover back to levels where we were back in January. So it has been a year I think most people would like to forget and get through as soon as possible. But obviously we are left with a market where there's still an imbalance between demand and supply. It is improving as we speak, but obviously with renewed outbreaks as we're seeing here in Europe, where I'm based, and also in the US and elsewhere, we're going to see a prolonged return, or it's going to take a longer time before we get back to some kind of normality. And obviously in a case like that, we have seen the importance of oil producers to act in unison and try to step in and arrest the hold. And that's really what we experienced with OPEC Plus back in April, when they obviously faced with this horrible collapse and dwindling revenues, had to do something. And the production cut we saw back then was obviously laying the foundation for the recovery. Right now we're back into the low 40s, and we're probably going to stick around these levels now for at least for another few months before I think we eventually will move higher next year. But as long as we don't have the vaccine, as long as we're still forced to work from home on a regular and irregular basis, then obviously it will have an impact. And then obviously I think the big question is really, are we going to return to a demand growth in 2022 and beyond? How much have we as a global community changed our behavior through this experience? And obviously we simply don't know yet. Are we all going to jump back on a plane when we can because we want to visit friends and nice places? Or are we going to stay at home? Are we going to work from home? Are we going to stay local when we go on holiday? So all these issues are some that obviously will help determine the outlook for the future. But for now, stuck in the 40s, and that's probably where we're going to see it for the coming months.
Herman, I'd like to hear your thoughts as well, because I know S&P Global Plus does a lot of reporting on this front. So, I mean, looking at the outlook, Ole has, just said it will take some time to recover. That's kind of what we're expecting all around. But do you have any comments on the oil price movements and supply demand movements?
Yeah, sure. I mean, we just had a monitoring committee meeting, the JMMC of the OPEC Plus coalition, and really, the only certain thing that we can say about the oil market is that there's uncertainty, and that was the point that the Saudi Energy Minister, Prince Abdulaziz bin Salman, he made that point in his comments. A lot of people are looking at OPEC Plus to extend their production cuts. They're scheduled to taper at the end of the year by about a quarter to about 5.8 million barrels per day from 7.7. And there are a lot of questions about whether the market can absorb those barrels. We've got the return of Libya. We've got obviously uncertainty about the second wave of the pandemic and all the lockdown measures that many countries, including right here in the UK, are reimposing on some communities, and that's possibly going to hit energy demand. And of course, we know that the aviation industry still isn't back yet. So, a lot of moving parts of this market and a lot of questions about what OPEC Plus is going to do when they have that November 30th, December 1st meeting. Of course, we're sitting here, 5 weeks, 6 weeks out from that actual meeting, which is a lifetime in the oil market. Lots of things can happen. Maybe we get progress towards a vaccine. We have the U.S. election, that could impact the course of the oil market. And of course, Libya has shown itself to be a pretty unstable place. So even though its production is returning, that's not guaranteed to last. And so, I think the approach right now for OPEC Plus is to kind of wait and see what the market indicators are like close to that November 30th, December 1st meeting. But I think the expectation is, and there's a growing realization by many of the delegates within, but by no means all of them, that if prices remain in this low 40s level as we head to that November 30th, December 1st meeting, perhaps something needs to be done, and whether that's extending the cuts or the devil will be in the details on how long they extend those cuts, and how they divvy up any new quotas, and how they accommodate the return of Libya if Libya is sustained. Those are all questions that the oil market will be looking at.
So, I guess we've touched on this a little bit already, but how would each of you describe OPEC's role at present? So, Dr. Sabban, if we can start with you, how would you describe OPEC's role in the global oil market right now?
Thank you for inviting me to participate. First of all, OPEC and OPEC Plus are doing a great job to the oil market as far as the OPEC Plus agreement. I know there are some members who are not abiding by their commitments, but they have promised to compensate in the coming month before the end of the year. Having said that, I think the role of OPEC Plus will continue to be crucial during this crisis. This crisis has been a surprise to OPEC. They were on the course of enjoying high oil prices, and then we found that prices went down to as low as $16 per barrel. But having said that, I think the notion that this crisis will change the consumer behavior, I don't think this will happen unless this crisis of COVID-19 continue for 2 or 3 years, God forbidden. But a few months or 1 year will not change the behavior. I know that companies are willing to communicate by internet, etc., but still, the same as for education. I have my children, they are suffering from being at home and learning from the sets, the different sets that they have. But anyway, in all cases, I think OPEC, the role will continue to be very important. Saudi Arabian leadership, along with Russia, is driving the OPEC plus boat to the safe side. However, I think the uncertainties evolving the demand is going to continue with us for some time, especially if there is no vaccine. But if there is a vaccine in the world economy, then definitely this will help alleviate or mitigate some of the weaknesses of the demand for oil. So in the short term, I don't think we have a lasting impact. Well, The Economist, the respected magazine, they said that, well, this crisis has brought the demand for oil to its peak. I do not agree with that. This is a short-term crisis, and once, as we saw, once we reopen economies, we have seen that demand start to pick up, especially in China. Of course, the second wave has stopped this recovery, a gradual recovery in demand from materializing to a level where we can enjoy the pre-COVID-19 levels. To sum up, I think the role of OPEC in the coming month will continue to be crucial. The cooperation, the OPEC Plus agreement is a historical agreement as far as the numbers of the members, as far as the quantity of production cut, as far as the countries who did not join the agreement, like the United States, Norway, Brazil, etc. They are more or less part of the agreement unofficially by limiting voluntary or involuntary their production, oil production. So I think this will continue, and those who are violating their commitments will know that if they continue violating, this will not stop any other members from doing the same, and then we will have a free-for-all market, and this could repeat the March price war, which nobody can accept because it is a loss-loss game. It is not a win-win game. So everybody needs to look at that and give more consideration. And as far as the latest statistics, we have seen that it is only 6 countries out of the whole OPEC Plus members who are abiding by the agreement. But with the seriousness of Prince Abdulaziz bin Salman, Minister of Oil, Minister of Energy of Saudi Arabia, and Minister Novak in leading the coalition, I think we will gradually go back to the close to the adherence by all countries. I know that Libya is something that is disturbing to OPEC Plus, but this is a reality, and they need to adapt to it. And we don't know what will happen if President Trump continue for second term, or
we'll touch on the U.S. election a little bit later.
Okay.
So
I'll stop here. Thank you.
No, but thank you for your comment. Dr. Vakshuri, how would you describe OPEC's role at present and in the next few months?
So it's the other panelists alluded to different aspects of the OPEC importance. one thing that is very important, the keyword of these days market, is uncertainty, as Herman mentioned. So we do have a significant uncertainty when it comes to demand side. So we do not know when exactly the demand is going to recover, how fast, or if there are any threats to demand going back again to where we had a significant global lockdowns. But what is the significance of OPEC, especially at the moment, and now that we have a demand uncertainty, is that OPEC is giving a certainty, some sort of certainty on the supply side. There are different factors. We could mention Libya, and there are other issues that we could look into that they could create supply certainty. But OPEC and the OPEC Plus overall, they are producing a majority of the supply in the market. So having them together, deciding on how much should be their production, that gives a certainty in the market. And we experienced back in March, then when the OPEC Plus failed to agree on a production cut or continue their previous cut, the market entered into a chaos. And then we had a free market that everyone was trying to produce at maximum level. We had all the storage tanks that they were filled up to their top, and then we start seeing the collapse of oil prices, even occasionally to negative for certain oil contracts. So it's very important, and especially at this point for the OPEC and OPEC Plus generally, it's very, as mentioned, it was a historical deal, but most historical part of OPEC Plus is that Russia is now on the same table with the OPEC, and they're trying to control their prices, their production. So this is very significant and important, especially at this time. We did, back in May, we did an extensive discussions and interviews with most of the US shale producers. And we asked all of them if there is any possibility that at some point they would consider to have certain amount of voluntary production cut. At the end of the day, if it was and it is in their benefit, at the times that prices are collapsing, to have certain amount of production cut. The answer from all of them was that they would never going to accept a voluntary production cut, because their business model is simply different. They are not like OPEC plus countries that the minister would command a certain amount of production, but they are all private companies that they look into their own commitment, and their only commitment is to their shareholders and their balance sheet. So we would not ever, could not imagine that we could see a voluntary cut from, let's say, shale producers, which are responsible for the major supply growth in the market for the past few years. So I would say that especially at the time like this, that we have significant uncertainty, OPEC Plus has a very important role. The other thing that I would like to mention is the impact of OPEC, and especially I would say Saudi and Russian are very, very concerned and very careful about how they're designing their messages and how they are, I would say, use certain keywords to announce their decisions is very important, because Prince Abdulaziz of Saudi Arabia is not only communicating with a physical market, which is actual cut of physical supply in the market, but he's also communicating with the traders and a paper market. The way he's threatening the oil paper market, or let's say putting fear in their hearts and minds to bet against OPEC, or how he's carefully designing his messages is very crucial, because we know that Ola might tell us more, but most of the traders are using algorithms and big data programs to do trading with them. And those keywords that especially Russian and Saudi Arabian oil ministers are using are very crucial in converting those into, let's say, a certain market. I will make few quick examples, like Prince Abdulaziz in his last remark, the introductory statement in the last OPEC meeting, he used three keywords. predictable. OPEC wants to have a predictable market. They are going to be proactive into make sure that the market is going to be a certain and calm market. So all these keywords are very important for the mind of algorithm when it's looking into the future prices, which ultimately have impact on the today's spot prices. And there are so many other examples that how Saudi oil minister and Russian oil minister carefully design the messages in terms of keywords and the literature they're announcing. The other big example was when they announced that they were going, both Russia and Saudi Arabia, add about 500,000 barrels each one oil to the market. They made sure that they are announcing that this is going to be used domestically for their own domestic use. At the end of the day, it was adding to the whole pot of supply, but this was very important, that how they assured the market that this additional oil is not going to be exported. So I would say that very important role OPEC is holding at the current moment.
Yeah, that's definitely an interesting take, especially kind of the detailed analysis from the trading side. I actually wonder, Oleg, do you have anything to add to that, or do you have any comment on that? Because I think that's fascinating.
Well, I think it is. It's a very good point that they made, because obviously the supply and demand balance doesn't change on an hour-to-hour basis, but obviously the market does, and the market does really react to technical developments, to breakouts, to momentum, and any span in the works that can kind of upset that those movements is obviously something that can help further stabilize the market. So after that OPEC meeting and that comment, we did see the market. That was basically when Brent made it back above $40 after was looking and not staring at the abyss, but at least was starting to get troubled by the renewed coronavirus cases around the world. So it did have an impact, and yes, we do watch these data on a weekly basis, because obviously, or the speculative data, because market thrives on data, and the more we know, the more reaction the market can take to it. So taking out some of these some of these spikes, peaks and throws through verbal intervention is obviously helping to create some stability. And OPEC Plus is, I think, as was said earlier, have done a sterling job in the past few months. Obviously, coming out of a very, very short-lived price war now to supporting the market, and that role is going to be even more important going forward, because now we have a demand which is slowly coming back, but then we also have a massive amount of spare capacity that needs to come back into the market. And how they manage that without upsetting each other and without upsetting the market, that's obviously going to be a key into 2021.
Yeah, if I could just chime in here, I think this notion of talking to traders is something that OPEC has, I don't know if embraced is the right word, but they're certainly a lot more open to talking to traders now. And I remember I spoke with Mohammed Barkindo, the Secretary General of OPEC, last year just about this topic. And, he said he was meeting with hedge fund managers and money managers. And, in his words, he said, sometimes these traders, they speak almost like a foreign language, and so it was an effort on the part of OPEC, these producers, to try and understand what motivates them. I think it could be argued that even with all this outreach, that OPEC, just by its very nature, it's a reactive organization. It's even as much as Prince Abdulaziz might want OPEC to be proactive, the reality is trying to politically get these 13 countries, and then you add another 10 non-OPEC in the OPEC Plus alliance, trying to get all these 23 countries on the same page. It's difficult to do, let alone be proactive in the market and try to get ahead of some of these money trades that are being made in the market.
We've discussed kind of OPEC's role at the moment, what OPEC is really doing in the oil and gas market right now, but obviously the industry is shifting quite rapidly in many different ways. We could talk about energy transition, we can talk about geopolitical movements, and obviously the pandemic has had its own impact. So in its current form, as we've defined it, do you think OPEC is relevant in what looks like it will be a vastly different future for the oil and gas industry? And I think I'd like to start with Dr. Saban. So do you think OPEC will be relevant in a future that is going to look different than the market does today?
If you are speaking about the 2020s, OPEC will continue to be relevant. I understand that there is an energy transition because of the structural change on the demand side and on the supply side. However, this will not be materializing before the 2030s. So I think during the 2020s, OPEC will continue to try to stabilize oil market and will continue with its role. But even in the 30s, I think OPEC will have some role to play, especially if some of the objectives of shifting to renewables and try to get away from oil, as being said by the IEA, unfortunately, still OPEC will have some role in the market, even though it is going to be diminished. I think the problem with the current transition is that it is an artificial transition. We all know that science of climate change is not, the jury is still out with regard to many issues in climate change, but we are hurrying and trying to isolate some of the GHG gases, try to pick only CO2 aside from methane, nitrous oxide, and other greenhouse gases. And not only that, but also picking fossil fuel from all other sectors of the economic sectors that emit greenhouse gases. So I think with this selectivity that we have seen, oil will be hit hard, not because of the protecting the environment, but because of the hidden objectives in the West to fight oil, imported oil. And I remember here Henry Kissinger in the 70s, after the oil boycott in 1973, he said, we will come to the day where the Arabs will drink their oil. And I think we are gradually coming to this. And unfortunately, some of us are not realizing that this is becoming reality. So I think this energy transition, even though I have nothing against renewables, nothing against diversifying energy sources, but when you are not leveling the playing field and giving subsidies to renewables, and not only renewables, subsidies to coal, which emits more greenhouse gases than oil and gas, then definitely we start to see a big question. Why are we doing that? Are we protecting the environment? And once I was with the German minister, and I told him, you are still subsidizing coal industry. He said, yes, there are hundreds of thousands of German workers who work in the coal industry. And I told him, you know that all of the Saudi labor force are working for the oil industry. And so who's going to complain? Us, Saudi Arabia, or Germany? So we ended the discussion there, but he admitted that we will be hit hard as an oil exporting countries because of this bias agreements. And not only that, but also we see that once we talk about carbon taxes, it is basically, it ends up to be gasoline tax. Mm-hmm. And it is not according to the carbon content. So there are some weaknesses in the Paris Agreement, which tend to be an energy agreement. It is not a greenhouse gas agreement. If you look at the UNFCCC convention, something that I had the honor to negotiate, it is calling for a comprehensive approach that include not only CO2, but all other greenhouse gases, and not only energy sector, but all economic sectors, including forest. Deforestation is a major problem for not absorbing CO2. But anyway, this is a very long discussion, but I want to say that we are seriously bothered and worried about the intent of the climate agreements that is going not only in the West, but spreading everywhere. And many oil importing countries are adopting certain policies and measures that will shift them from oil to other sources of energy.
Well, I mean, shifting away from intent, though, looking at OPEC as an organization that manages supply and demand for oil, I'm curious to hear, I mean, will it be able to survive in an environment where oil is maybe not the main or a major resource for fuel as a fuel? So I guess, Herman, if I can pose that question to you, is OPEC ready to transform into a role that can coexist with a different energy mix?
Yeah, thanks, Carla. I mean, I think OPEC, well, they released their World Oil Outlook the other week, and it was interesting in that it was for the first time that OPEC acknowledged that the possibility of peak demand might be out there. Now, they projected it out to 2040 to 2045, so still several decades off, and obviously we see that, in stark contrast with the likes of BP and Shell and some of the other oil majors that are predicting a much faster energy transition. Now obviously, there are vested interests on both sides of those outlooks. But, I think OPEC has, for the longest time, said that even in a declining market, even if this idea of peak demand were to happen, they've got the lowest cost of production. And so they really will be the last producer standing in this world. I think this will, I think it'll no doubt change some of the dynamics within OPEC. And, I think you're seeing some of that, even some of that early trends kind of play out now, where as they try to manage the situation now, where and perhaps this pandemic is a preview of that kind of role that OPEC may play in a declining market, because we've obviously seen a market shock and demand plummet, especially early in the second quarter of this year. And now how they try to manage that going forward is an open question, and that kind of sets them up for the coming decades, I think. In my view, if the oil market declines, but OPEC stands to gain market share because of its low-cost structure, I think that makes a lot of the more bilateral agreements and the bilateral talks with some of their major buyers, whether that's China, whether that's India, whether that's with even the U.S. The U.S. has its own obviously robust shale oil and conventional oil industry, but in a peak demand scenario where investment may be hard to come by, we may see some of that shale production peak and plateau, and then eventually fall off, and standing there will be these low-cost OPEC producers in the Middle East there to try and capture that market share if it's still there. So I think this is going to place an important premium on these bilateral talks, these bilateral relations going forward as the demand evolves.
Dr. Vekshuri, do you have any thoughts on the topic?
I think something that is very important to consider when we are talking about climate change issues, energy transition, and peak oil is that the quality of oil also matters a lot. And I really understand when Dr. Saban says that the OPEC or oil producers in the Middle East are concerned about these climate change discussions, because it seems that the first target of all these climate change and energy transition topics is black oil, which is mostly a black or heavy oil that is mostly produced in the Middle East, and OPEC producers are producing them. What Herman said is also very valid, that the OPEC producers are producing the lowest cost or cheapest oil in the world. And if we are living in a world that the oil prices are very low, the last barrel would come out, let's say, Saudi Arabia, because the prices of oil is very low. But the regulations on all the regulations, the climate change regulations, are set in a way that the peak oil for heavy and black oil is reaching way faster than light oil that is produced in United States, let's say, or outside of the OPEC countries. So that's, I think, a nuance that I want to add to this discussion. Thank you.
Okay, and Ole, anything to add from your side? No. Okay. Okay, perfect. Then we'll move on to the next question. Oh wait, 1 second. There you go. Sorry, Dr. Saban. You're on mute.
Can I add something?
Yeah, absolutely.
There are two things. Our colleagues talked about the low-cost production of oil in the Middle East. That's true. But we know that OPEC, in general, they are the residual supplier. That means that all other nations who are importing oil will take their imports from all other areas and countries aside from OPEC. So OPEC also will be penalized from that point of view. Secondly, we forgot about the technological progress that the world is watching these days. Who could have imagined that the cost of producing 1 barrel of shale has dropped from more than $80 per barrel to less than $35 per barrel, and this will continue. And I wouldn't be wondered if the gap between conventional and non-conventional oil start to narrow and getting closer and closer from each other. So that is part of it. And we are living in an artificial world where taxes on oil products will continue to increase over time under the pretext of protecting climate, while other sources of energy will enjoy either subsidy or tax relief. So the treatment is not equal and not fair. And I remember I used to be the head of Saudi delegation to the UNFCCC, Climate Change United Nations negotiation committees. And we faced a lot of fight against oil. And I still remember when President Obama took the floor in Copenhagen, and he said that climate change negotiations will offer us an opportunity to reduce our oil imports. And I raised my flag and I told him, Mr. President, we are in a globalization. Do you think that what you are saying will serve the globalization? And he said, no, but we are looking for our interests. Anyway, this is another issue, but still, we are worried about these distortions in the market, these unfair, unequal treatment of oil vis-a-vis other sources of energy that will hurt hard oil industry. And regardless of the oil, the cost of barrel of oil, and regardless of who to take your barrel from, the world will come to the reality that there will be surplus in supply, and there will be a competition as far as prices, and demand is diminishing. And that is really serious to us and to many oil producing countries. Sorry to take the long.
No, you bring up some interesting points, and I'll take this as kind of a segue into talking a little bit about the United States. Obviously, we're heading into an election in November. I would like to know, at least first from Dr. Vakshuri, because you are based in the U.S. Do you expect the results of the U.S. election to impact global trade and in turn OPEC?
Yes, of course. That's going to be one of the major impacts of the U.S. Election on the global energy market, because obviously, if we would have a President Biden in the White House, we are going to expect that the peak oil, especially peak heavy oil demand, to reach way faster than if we had President Trump in the White House. And this is going to have, yes, significant impact on the regulations, because especially if the Congress, the next Congress is majority dominated by Democrats, then the climate change regulations, all these carbon trade and taxes that Dr. Saban mentioned, are going to go implemented and moved way faster in the United States, because in terms of regulations, US is still behind Europe in terms of implementing regulations, but that does not mean that the whole country is behind in the whole process of moving forward. So imagine if there is just a regulation inside the United States that the octane of gasoline should move, like let's say 1 or 2 degrees higher, just slightly above what it is today. Obviously, the demand for gasoline would peak in US way faster, and people would move quicker inside the United States toward the EVs, which is a huge market for driving in the world. So I would say yes, the US election is going to have a significant impact on the global climate change speed in terms of regulations and taxes and the speed that they're going, and also about the peak oil demand. Something that I would like to add to what Dr. Saban mentioned is that there is no really clean way of producing energy. And if, let's say, I would like to make an example of wind energy, there is all these discussions in US about when these wind turbine blades are retired. There are massive graveyards for these wind blade turbine, which it takes a lot of process and significant amount of energy to recycle them. So there is not really any clean way of producing energy. And again, all these climate change discussions are solely focusing on carbon emissions. So there are many other issues that it's important to be considered when we're talking about the impact of process of energy production and the whole process of this huge industry and the climate change.
Yeah, definitely. And I guess next time I'll invite you guys for an energy transition talk, because we're hearing so many interesting points, and I'd love to go even further into that. But I am going to keep us on track. Ole, if you could comment, I mean, for the US election, do you expect it to impact OPEC and the oil markets in general? If so, how?
Well, obviously, we know what we have now, and the markets right now is trying to speculate what we will have if we do get a Biden win, which obviously the polls are pointing towards at this stage. I think the initial reaction in the market is setting himself up for a Biden win, and one with more regulatory, a stronger regulatory environment, which potentially will slow the recovery in the U.S. oil field. But at the same time, it may also just have from a growth perspective, a negative impact, because it could send prices higher after November 3, and that obviously is counterproductive at this stage where we don't need more production, we need just stable production. So it's going to be interesting to see over the coming years. But I'm just interesting. I saw today there was some speculation about, well, what if we do have a Biden win? Will OPEC then think they can force through or they can come through with their production increase in January, because U.S. production will be hampered? That's probably a too early assumption. But one thing's for sure, we will see continued volatility in the oil market, especially with the Biden win and the market trying to adjust to what it will bring. But I think overall, U.S. production is going to grow again from here, but we can just see this. The whole climate discussion is also changing investors' perception. So countries where it's government run, they're not in the same straitjacket as U.S. producers, and we're seeing all these mergers right now occurring in the U.S. shale patch, because the access to finances is going to be more difficult going forward, and that in itself could potentially just slow the recovery in U.S. oil growth. And if we assume that we're going to return to trend growth at least for a number of years, then obviously that will leave more space for OPEC and some of the OPEC plus producers.
Herman, do you have anything to add?
Yeah, if I could just jump in. Yeah, I mean, I think what's interesting is this idea of OPEC and their politics with Trump, and we saw that earlier last couple of years, that you have Trump tweeting at OPEC, warning them about high oil prices and warning them not to cut production too much, and just talking with some delegates in OPEC, those tweets at OPEC weren't really welcomed by OPEC. This interference in their affairs, and it really kind of stirred up a lot of their meetings. Now then we had the price war back in April, and Trump took the opposite tack, and he got the OPEC and Russia back together to put a floor under prices with this production cut and forge this agreement. So it's been a very activist role that Trump has played with OPEC. If we see a Biden win, I would not expect that kind of activist role by a Biden administration. But on the same token, though, let's be real. The relations between the U.S. and Saudi Arabia and other key members of OPEC are still going to be largely based on oil diplomacy. Saudi Aramco owns the Motiva refinery, the largest refinery in the U.S. We see a lot of Saudi crude. Obviously, that fluctuates with shale oil production, but a lot of Saudi crude goes to the Gulf of Mexico. A lot of Iraqi crude goes to the Gulf of Mexico. We see Nigerian crude sometimes going to the east coast of the U.S., competing in some cases against shale oil. But these trade flows are not going to stop just because of a Biden presidency, and it's going to be based on arbitrage economics. And so, to Mr. El Saban's point, we live in a globalized environment. It's a global oil market, and anything that causes the price of oil to wobble is going to impact consumers and producers worldwide in some way. So, I expect that there will be a lot more back channel talks between Biden and members of OPEC on oil policy. It won't be as maybe assertive as Trump has been, and the tenor of those talks may be different, and the content of those talks may be different. But there's not going to be a stopping of oil diplomacy, even with a change in administration, in my view.
Okay, and obviously we've talked about OPEC plus. We've talked about kind of the kind of coalition to stabilize oil prices. But we have seen some reluctance in the past from Russia to cut production. So I would like to know, I think starting with Ole, do you see this alliance further extending in the future? And if so, why? Why not?
I think it will, because we've seen the success that they've had, and they've seen the need for two of the world's biggest producers to sing from the same sheet. So I think that will continue over the coming periods. And again, I think it's absolutely important what Herman said, that we've gone from U.S. being obstructive to higher prices to now them being on the same page as well, because of the massive oil industry in the U.S. But perhaps not as forcefully on the Biden administration, but at least there are the three major producers are all in unison in trying to support the prices. And with that in mind, I think Russia will continue to play ball and continue to stay on board. Obviously, slightly difficult for them sometimes to direct the individual producers to do what they're instructed to do, but they've seen the success of this plan, and I see no reason why they shouldn't continue that.
Yeah, and I'll take this next to Dr. Sabban. You've been very positive about the OPEC Plus alliance, so I have a feeling I already know your answer. But do you think the OPEC Plus alliance will extend in the future?
It should. I mean, theoretically, they have no other alternatives but to cooperate, because the alternative is worse. And we have noticed that when the big fight between Russia and Saudi Arabia back in March, and the result of that, of a price war that was ignited by Russia when they went to the media and they said, we will produce at maximum, and there is no agreement, and we are not part of the coalition. And that motivated Saudi Arabia to react by increasing its production, and then we saw what happened. But let me comment. You didn't give me a chance to comment on the election, whether President Trump or Biden will win. President Trump, I like his approach, being a businessman. He said, as far as he withdrew from Paris Climate Agreement, we all know that. And he said that I wouldn't sacrifice our oil and gas and coal for the sake of an uncertain science. So if President Trump win a second term, then climate efforts will be dead. I mentioned it to many worldwide media that once President Trump be re-elected, then you will never see climate debate continue. And even if it continues, there will be no agreement. There is no financing. The major emitter in the world will not be part of it. So it will be killed. And to be honest with you, that's good news for Saudi Arabia and many oil-producing countries. I know the Europeans would hate that, and that's why they are pushing to get Biden to be the next president. Secondly, as far as the fungibility that we talked about, this is true. And that is what worries us also, because when you favor some markets to get your oil from at the expense of others, then definitely this will result in keeping OPEC somehow vulnerable to not buying their oil, even though China, as you said, India, but China and India and others are also taking climate measures into consideration. Coal is a major source of energy in China and India. They are not touching that, but they are imposing some taxes on oil products. Again, this is another bias in the international discussion. And I remember I was also part of the Saudi delegation to WTO, and there was a huge resistance not to include oil in the rules of the WTO. So there is some disturbances here and there that affect developing countries, affect oil exporting developing countries. And I think at the end of the day, we will pay the price. One issue that we raised during climate negotiation, that we seek compensation because of these discriminatory actions and policies and measures. And they say, no, Saudi Arabia cannot be compensated. Anyway, that's a long issue.
So take you back to my original question about OPEC Plus. Do you see?
Okay, OPEC. No, this is very important for OPEC Plus. Come on, OPEC Plus will continue to survive because this is a major interest to all OPEC Plus member countries. Thank you.
Herman, your perspective?
Yeah, you know, I mean, I think it's a complicated world we live in, I guess, and there are many moving parts to this. You know, climate change regulations are certainly going to play a role in the oil market going forward, and this is something that OPEC Plus is going to have to adjust to, and in this world, you know, this idea of Russia cooperation with OPEC Plus, you know, it's you know, as much as OPEC likes to talk about it as a Catholic marriage, a permanent deal, you know, I think we've seen evidence that there are limits to that. We saw that back in March when they couldn't agree on a path forward, and we had the market share battle that broke out in April that exacerbated the market crash. You know, maybe in some ways that was actually a tough lesson learned for everybody, and that it really did end up bringing them back to the table with the help of President Trump, because they saw the impact on prices, and you know, in some ways it was Saudi Aramco and Saudi Arabia's way of showing their market strength. They could get up to 12 million barrels per day, 12 and a half perhaps, and you know, they have this ability to quickly ramp up their production, and so that is a strength of Saudi Arabia, and that's what makes it the kingpin of OPEC. And I think that was something that Russia had to recognize and come back to the table. Now, you know, we're seeing now that as the situation goes to the end of the year, where the cuts are scheduled to taper, and we know that several countries, not just Russia, but several other countries within OPEC want to raise their production. They're tired of reining in their production, and but you know, it's a, you know, they've got to be cautious, right? So you know, this is why I said that, you know, earlier in the talk, that getting all 23 countries on the same page is no easy task, and you know, even though the market might be saying one thing, the market indicators might be saying one thing, the geopolitics might be saying another thing, and the domestic concerns of each of these countries might be saying a different thing. So you know, I think it'll be interesting going forward to see what they do with these cuts, and maybe that'll be the ultimate test of how long Russia stays along. You know, I think Russia does see value in cooperating with OPEC, and you know, let's also be cognizant of the fact that even if they do taper down to 5.8 million barrels per day, that's the largest cut, you know, beyond the initial 9.7 and the 7.7, but that's still bigger than any other cuts that they've done in the previous 4 years of cooperation. So it's still a huge deal. So you know, there are reasons for this cooperation to continue, but as with you know, all negotiations, sometimes there are concessions that need to be made, and so that really is what we're watching at that November 30th, December 1st meeting.
And just finally, Dr. Vekshuri, anything that you'd like to add?
Something that I like to add is that, yes, Russia sees value in cooperating with OPEC Plus, and at least for what we can see for the next year or so, there has been an agreement which assures the market of this cooperation. When the OPEC Plus have gave the market a production cut until 2021, this is also a signal or an indication that Russia is on the same page with the OPEC and the rest of the OPEC Plus countries. But something that we can never be sure, we can never say never in the energy industry, and we cannot be sure that how future could look like. There are some buts or some issues that Russia is not exactly in the same situation as OPEC is. For instance, the role of oil and oil prices in Russian economy is not as significant as it is for the rest of the OPEC members. And also the other issue is the Russian producers. So as of now, the current cooperation with OPEC is in favor of Russian producers, which ultimately they have to cut back their production. But we don't know that if there might be situations or scenarios in the future that the producers would not simply agree to cut back their production, the Russian producers. So what I would say is that this is a very good indication that OPEC Plus tried to give a long-term production cut plan. It doesn't matter if they would go month to month based on that production plan, because they are going to meet and they are going to balance their production with realities of the market. But again, going back to what I said earlier into our meeting, they're trying to give signals to the traders, to the physical market, and to the future prices that at least until 2021, Russia is determined to be on the same table with the OPEC and on the same page if we don't have any sudden or new event that no one could expect it.
Okay, thank you. I mean, that's all the time that we have. We've actually gone a little bit over time, so I appreciate all of you joining us and giving your insight into this topic. And to those in the audience who are sharing questions through the chat, we do not have time to take questions, but we will share them with the speakers and post the answers on our website and social media. So make sure to check in later. And stay tuned for our next session on shifts in cybersecurity with Saudi Aramco's Chief Information Security Officer after a short break to bring our guests into the webinar. Thank you to our panel for joining us. I really appreciate you giving your time. The coronavirus pandemic has grounded people across industries, leaving them working from home and unable to travel or commute. For oil and gas companies, which have extensive digital and physical assets, questions of cybersecurity are constantly arising as cyber threats shift and as they increasingly look to digital technology as a new solution to old problems. We have a true expert with us today to assess the shifting cybersecurity landscape. Saudi Aramco's Chief Information Security Officer, Khalid Al-Harbi, is here to discuss the shifts in cybersecurity during and after the coronavirus pandemic. Thank you for joining me today, Khalid.
Thank you.
We're very excited to hear more about this. It's obviously an interesting subject that's important to all oil and gas producers, and on the scale of Saudi Aramco, it will be fascinating to see your perspective. So let's just dive right into the questions. So starting with the start of the pandemic. So when the pandemic started and there was this start of a market crisis, what were the biggest concerns for you in terms of cybersecurity? And how did you manage those concerns?
Okay, I think the COVID-19 pandemic introduced unparalleled challenges to organizations, especially organizations that depended on the perimeters for securing their infrastructure. The new pandemic requiring social distancing and forcing employees to work from home meant that the threat landscape is actually going outside. Your surface is expanding. So you had to actually manage that risk in order for you to ensure that the environment remains cyber resilience in face of this pandemic. Luckily, in Saudi Aramco, we have a very strong foundation for a resilient and digital ready infrastructure that enabled us to securely avail these services to our employees without impacting the business. We actually had to partner with our IT organizations to ensure that any service that is availed to employees to work from home went through very rigorous risk assessment processes in order for us to identify the risk and introduce any controls to mitigate such risk. Another aspect that was actually introduced part of the COVID-19 is that cyber attacks are usually opportunistic, and whenever a big event such as this is happening around the world, attackers actually leverage this to begin building their attacks. And what we've seen is that phishing attacks, which still remains to be the number one target attack vector, shifted in the use of COVID-19 as a theme for the attacks. This is basically trying to leverage the emotional activities or the emotional engagement that the people have with COVID-19, wanting to know what's happening with the vaccine, what are the numbers today. So they try to leverage that emotion to actually provoke active action from the individuals in order for them to succeed in their attack. Alhamdulillah, I've been very successful in identifying these ahead of times and addressing them.
Yeah, I mean, that makes sense, obviously. Like you said, cyber attacks are quite opportunistic. So, this presented a big opportunity for them. Now, you've mentioned a little bit about the shift in kind of the cybersecurity focus or the cyber attack focus. But has the pandemic changed your security strategy at all?
By its nature, a strategy should always be able to adapt whenever there is something disruptive occur. Cybersecurity is not a stranger to this as a strategy process.
And I know it's difficult for anyone right now to think about 2021 or because there's so much uncertainty, but can you tell me, what are your security priorities looking ahead to the next year?
Well, I think our security priority is probably the security priority of every Chief Information Security Officer today, which is basically to enable secure digital transformation. And this is something that we are currently partnering with the Digital Transformation Office, as well as information technology and the business, to ensure that the company adopts a very secure digital transformation in order for us to reap the benefits of the digital transformation without actually falling in any of the risks. So that's actually one of the priorities that we have. We will continue to focus on improving our detection and response capability to instill cyber resiliency within the organization. This is something that we feel is a pillar in what we have. So that's something that will always be on our radar, is improving detection and response. And the third item, I think I just shared briefly, which is basically focusing on our user base, the cybersecurity awareness and training. This will always remain a priority to us and will continue to be for the next few years.
Now, what are the biggest challenges with cybersecurity for Saudi Aramco? I mean, I've mentioned this before. It's a huge company. I've been to the headquarters myself. It's vast, the number of employees, the number of physical assets, the number of digital assets, and the way they converge. So what are some of the biggest challenges that you face in terms of cybersecurity?
As you mentioned, right now we are seeing an increased in connectivity due to digital transformation. And one of the foundation of cybersecurity is actually asset management. The second aspect, I think that digital transformation is also merging the physical and the digital world together, which introduces new risks that are pertaining to safety. So this actually, again, needs to go in a very structured way, ensuring that all the cybersecurity policies and standards are in place and effective, and the risks are managed as we continue to deploy solutions to leverage the transformation. So as I can say, I think these are probably the two biggest challenges right now, and I believe that we have what it takes to address them, inshallah.
So obviously we covered kind of the challenges or, the hurdles for cybersecurity, but where do you see the most potential for growth in the cybersecurity space for oil and gas?
For oil and gas, generally speaking, if I look at what's happening, we are actually seeing a huge explosion of connectivity and data. And this is going to be putting a lot of burden on the cybersecurity organizations to actually go through this data. So there is definitely a room for growth for automation and orchestration. It's currently happening, but I think we are going to be seeing an increase in automation and orchestration to give the security analysts to focus on the items that are important and let the systems or the machines actually run the processes that are low level. The second aspect also is, even with automation and orchestration, the data is still huge. And cybersecurity needs to actually even transform to face this. So technologies such as artificial intelligence and machine learning are going to play a major role in helping organizations be able to detect and response to attacks, because no human being can actually go and sift through all of this data to identify what is the threat. So there is going to be an increase and growth of dependency on artificial intelligence as well as machine learning.
Yeah, and that seems to be a trend across the board. Now, I'm not a cybersecurity expert, obviously. Could you just explain in a little more detail how do you automate cybersecurity functions? So what does that really mean?
For example, there are certain capabilities like generating reports or analyzing certain events. Certain practices require the analyst to actually go through it to say, yeah, this is a threat or not. These functions can be automated with a high degree of confidence. Other aspects is the delivery or the provisioning of cybersecurity services like identity and access management. You don't need a system administrator behind the desktop to give people access. You can actually begin automating such functions.
So you're even digitally transforming cybersecurity itself.
It has to, otherwise it will not be able to cope up with what's happening around us.
That's fascinating. So when we look at cybersecurity, what are some of the most common misunderstandings in the industry when it comes to, information security?
I think I'm going to say maybe there are currently maybe 3 misconceptions about cybersecurity, generally speaking. The first one is that they often look at cybersecurity as a state, binary. It's either 0 and 1. You're either secure or non-secure, which is not truly the case. It needs to be viewed from a risk perspective and at what level the risk is treated and what residual risk is there that you are willing to accept. So the reality, it's not a state. It's not a 0 and 1. There is a lot of variable numbers between them. That's the first misconception. The other is that cybersecurity is usually viewed as an overhead or as a roadblock for enabling services. And in reality, it could be if cybersecurity is not involved at the earliest stage. Cybersecurity needs to be built in. It's not effective if it's an afterthought. If cybersecurity is an afterthought, then it is usually a hurdle because, again, you forgot security controls and now we have to mandate them. So in order for cybersecurity not to be an overhead or a roadblock, they need to be involved at the earliest stage possible with every project. And the third misconception is that cybersecurity is technology intensive. And it is true that cybersecurity depends heavily on technology, but cybersecurity is human capital intensive. It actually requires very selective and very capable employees to actually run the show at the end of the day. So the majority of the investment should not be only focused on technology. It actually should be on the development of your employees who are at the end of the day will make technology effective and will optimize any process that we have. So maybe in a nutshell, I'd say these are the 3 main misconceptions on cybersecurity.
I'd like to touch upon the second point that you made, which is, you did mention how, you should implement or involve cybersecurity in your planning at the earliest possible phase. It's an interesting point. It definitely makes sense. Do you think that's something that is happening in the oil and gas industry in general? Not talking about Saudi Aramco, but in general, do you think oil and gas companies start by thinking about cybersecurity as a priority?
I believe the oil and gas industry views cybersecurity under safety. And the practices of the oil and gas when it comes to safety is that it is a very important value that we stand by. So based on the benchmarkings that we've done with the oil guys, I believe that practice is in place. It's whenever something transitions and makes a change. For example, the digital transformation right now is a completely different beast. And a lot of organizations want to leverage the value immediately. They might forget to include cybersecurity. So maybe this is for everybody as a general statement that you need to be even involving cybersecurity. In our case, for example, we are involved at the use case development, not even the design. So we are prepared when a design is there.
Yeah, and so as a whole, because since we're making a general statement about the oil and gas industry, is the industry mature in terms of its understanding and its implementation of cybersecurity measures? Where are we, in the stages of development towards being, as cyber secure as possible?
I believe that generally speaking, there is a great understanding of cyber risk in the oil and gas. And it is brought up the attention and the agenda of President and CEO of the oil and gas, and even the chairmen. However, that doesn't mean that there aren't challenges that the oil and gas is facing. There are definitely challenges in, for example, in the industrial control system, which is basically the OT, the operation technology environment. It is lagging as compared to the IT domain, which is a challenge that I believe the oil and gas actually are addressing as a collaborative union. We do a lot of exercises in collaboration with other oil and gas organizations. Saudi Aramco, for example, is also championing cyber resilience in the oil and gas with the World Economic Forum, and we have our partners also participating in the development of the program. So I truly believe that it is understood what cyber risk is. It is on the agenda of the president and CEOs, and they are tackling it through collaborations.
I do find that an interesting point that, we do look to third parties or, experts to help with cybersecurity measures. I'm curious to see, do you think that cybersecurity will become more of an internal function in the future, or do you think we'll continue to need those third-party experts to help guide cybersecurity strategy?
No, I think cybersecurity cannot be done in isolation. There is always a need to collaborate and exchange information and share and learn from others and help others better improve. And the reason behind it is that we don't operate as an island. We are connected with our suppliers, with our partners. This connectivity requires that we collaborate at the challenges that we face together. And cybersecurity is actually one of them. Any organization that believes that they don't need anybody to secure themselves, I personally believe that they are setting themselves to fail. Collaboration is a must in this field. Otherwise, it's going to be a nightmare, and I hope that nobody faces that nightmare.
Yeah, I do agree. And that's a common theme in the oil and gas industry, no matter what you're talking about. It's always about collaboration. It's definitely not an isolationist industry whatsoever.
Yeah.
I do want to elaborate a little bit on that, because it does also present some risks, right? That increased collaboration, that a third party might bring something in, or if they are not secure, that might be a problem as well. So how can operators kind of tackle that added risk?
Well, in cybersecurity, there is a domain called supply chain cybersecurity management. So it is necessarily that as an operator or as an organization, generally speaking, that you identify the risk that your suppliers or third party pose to you, and develop whatever framework or cybersecurity controls that are needed to ensure that the risk is actually mitigated. And this is what we are doing. And for example, we established a cybersecurity program, and I'm happy to say that it actually was recognized by the CSO 50 award, and it will be recognized in November this year, actually. So it is a challenge, it is a risk, but there is a program that addresses such risk. The assumption that my security ends at my perimeter is a very wrong assumption. You have to go and beyond that. You have to extend support to even your suppliers who are struggling. And for example, one of the things that we do in Saudi Aramco here is that we hold an annual cybersecurity seminar for our suppliers to come and learn about cybersecurity. So we do a survey, understand what are their challenges, and then develop a seminar, a technical workshop that they are welcome to join. And we share with them best practices in this area. And we also link them with the cybersecurity service provider to help them further with this. We firmly believe that this is something that is a must, and we are definitely addressing it in Saudi Arabia.
I want to go back to something that you had mentioned earlier. You had been talking about the next steps for cybersecurity in terms of automation, machine learning, and kind of making it a little more autonomous, I guess. Where are we in that process? Is that something that's already being implemented? Are we close to that? Is it something that's recognized across the industry? So where are we in that process of moving towards?
We are talking about, for example, we talk about orchestration automation, and that's been there for a very long time. It's just we are seeing more organizations leverage orchestration and automation even further. When it comes to machine learning or artificial intelligence, I think there's been very successful uses of it, but I believe we are just starting. I don't think we are there yet. It's going to take some time, and it's going to take actually a lot of collaboration, because you could do a machine learning model at an organization that would be beneficial to others. So from a machine learning, artificial intelligence aspect in the field of cybersecurity, I believe we are just starting, but I think it's going to continue to grow because there's definitely great value in it.
Okay, well, I believe that's all the time that we have, but thank you so much for sharing your insight with me, Khalid. I mean, we have so much to learn as we continue to digitalize and as cyber threats and cybersecurity strategies change over time. So thank you very much for joining me in this discussion. Our next session is going to examine the future of the industry in a more existential light, with the world transitioning to lower carbon sources of energy. Where does oil and gas fit in? Find out after a short break. In our final panel of the day, we are going to explore the role of oil and gas companies as the world moves towards a lower carbon future. We're going to look at the measures that oil producers are currently taking and what must be done to tread the line between profitability and responsibility to remain relevant in a vastly different future. We have with us a panel of experts to discuss this most vital topic. With us today is ADNOC's Vice President of Sustainability, Samar Al-Hamidi, McDermott's Global Vice President of Strategy, Risk and Sustainability, Matthew Harwood, and Liv Hovem, who is the CEO of DNVGL's Oil and Gas Division. So welcome everyone, thank you for joining me. I am really looking forward to this conversation, and let's just dive right in. So I think I'll start with Liv. From a general perspective, where are we heading in terms of the energy transition? So, what are the key trends that we're seeing in the oil and gas industry, and what are the next steps?
Yeah, thank you. This is a good question. And we have studied that and released a report recently on the energy transition outlook, just a month ago, the last version of that. And what we see is that we are approaching a future where the world will need less energy, even if the global population increases and the global economy continues to grow. We predict that in 2032 is when the energy use will peak, and that from there on, humanity will start to consume less energy. And the reason we forecast this is mainly due to the large energy efficiency improvements in all sectors, which is accelerated by electrification, and the electricity is dominated by renewables. So electricity demand will more than double over the next 30 years. And we see that the supply of solar PV will grow 20-fold and wind growing 10-fold. If you look at the oil and gas and the share of fossil fuels in the world's energy mix, this will decrease from 80%, where it is today, to roughly half in 2050. We forecast that the demand for oil has actually passed, and that gas will overtake oil as the world's largest energy source by the mid-2020s already. But we also see that the natural gas, will begin to be decarbonized at scale from the middle of next decade. Even though this is quite a dramatic shift, and there is a significant effort of electrification and decarbonization, it is not enough to deliver on the Paris Agreement. Our forecast tells us that we will exhaust the 1.5 degree carbon budget by 2028 and the 2 degree carbon budget by 2051. So that again tells us that even though there is a rapid energy transition happening, we have to accelerate even more. Encouragingly enough, we have the hardware technology to reach these targets. We have, I mentioned, electrification, renewables, batteries, hydrogen and carbon capture and storage. But the key now is to scale all this sooner than is currently happening.
Yeah, so I mean, clearly there's a lot that needs to happen, and your forecast, is there's going to be a lot of transitioning happening in the very near future. And it's interesting, I mean, you brought up peak oil. I mean, even OPEC is acknowledging peak oil by around 2040 to 2045, which is not far off from your own forecast. So I mean, it'll definitely be an interesting period in the next few decades. Samad, I'd like to hear your perspective. I mean, what are your thoughts on the key trends and the next steps in the energy transition?
Thank you, Carla. I do see the challenge here for oil and gas companies. Obviously, the energy transition does raise some existential questions for the oil and gas industry. And the biggest challenge we have is how we can manage, shifting the strategic landscape while maintaining our commitments, obviously, to our customers and our shareholders and our stakeholders in general. And but more importantly, how we can find a way to play a leading role in the decarbonization story, right? So we've seen a number of major players in the oil and gas industry respond to this with a number of strategies and ambitious commitments to lower emissions and achieve net zero. So for IOCs versus NOCs, it's different challenges, different perspectives on how they can address that. When you look at the NOCs and they steward the national hydrocarbon reserves, and they contribute significantly to the governments or the nations that they belong to. So for an NOC, for example, like an ADNOC, a challenge is how do we maintain our position as a responsible and sustainable oil and gas producer in view of this dynamic energy landscape, while maintaining our commitment to support the UAE's national goals and economy as well.
And can you just, for the audience, I mean, what are the UAE national goals in terms of sustainability and transitioning towards lower carbon?
So in terms of, I can probably shed some more light as well on the ADNOC strategic goals. For the viewers who are not aware of the strategy that we launched in earlier of 2020, we've built on our legacy as a sustainable oil and gas producer and the history of achievements in sustainability. So we've put a number of strategic pillars that span climate change and energy, protecting and preserving the local environment, workforce diversity, and HSE. And under each of these pillars, we've put ambitious targets and goals to achieve our 2030 strategy. One being a reduction in greenhouse gas emissions by 25%. So that's G intensity by 2030. Maintain a freshwater consumption below 0.5%, again by 2030. Looking at how we can scale up our CCUS as well by 6 times. So our current capacity now is at 800,000 tons capture a capacity of CO2, which is done in partnership with Emirates Steel. And we're looking inwards within ADNOC as well and how we can scale up CCUS, look at potential sources of capture within ADNOC. And coupled with that as well, we will capitalize on the achievements we've done on energy efficiency. That's been the biggest contributor to our efforts so far. Maintain our zero flaring routine zero routine flaring policy in our activities and operations. So we're proud of these achievements, and the challenge is how we can propel that forward to look at how we can meet the climate change challenges, support the UAE in the commitments that they've made in terms of a cleaner energy mix for all of UAE, and how we can effectively contribute to that.
Yeah, I mean, the point between, an IOC and an NOC, the priorities are definitely different and the responsibility is definitely different. So I think that's a very interesting point. Matthew, just moving on to you, I'd like to hear your thoughts, I guess from the EPC perspective. What are the key trends that you're seeing, and what are the next steps when we're moving towards this energy transition?
Thanks, Carla, and thank you very much for having us on the panel today. We are also tracking the challenges of the energy transition very, very closely. We work for clients across the world globally, and actually, it's interesting to hear Liv's scenario about how the energy transition might unfold. I mean, what we're seeing from a variety of different sources is actually quite a wide range of potential outcomes. And probably in my career in the oil and gas industry of 25 years, it's probably the greatest level of uncertainty, I would say, about how the energy mix might unfold. We're seeing anything, for example, for peak oil being, as you said, from OPEC perhaps post 2040, to others saying that we've already had peak oil. And really radically different trajectories going forward, depending on not in short term the impact of the virus and the economy, but longer term on the speed of the energy transition. I think what's probably true to say in that energy transition is that hydrocarbons will continue to play an important role, supporting in petrochemicals and transportation for many years to come. And it's certainly clear that the oil and gas companies in the Middle East will have a very, very important role to play in that, as some of the lowest cost production that we have in hydrocarbons globally. And one of the aspects that I'm very interested in as a contractor is how do we support our clients like ADNOC in continuing to develop their core operations in a more sustainable way. So looking at how we contribute to the carbon footprint of our clients, whether it's in the supply chain, the way we engineer and design and build facilities, the way facilities are designed to run to minimize emissions, etc. So clearly, I think oil and gas does have a role to play for a long time, but we need to do more work to make it more sustainable. And then clearly also, as Liv said, there are going to be massive increases in investment in new technologies, such as solar and wind and hydrogen and carbon capture and storage. And the sort of second part of our activity is really to start to figure out how we can help our clients as they invest in those technologies, to help bring those new technologies to the market and to help scale them. Because it's achieving scale and cost competitiveness, which I think is critical in navigating this energy transition.
Now, to take it back to you, Samar, you've already touched a little bit on this, but I'd like you to elaborate. So from within an NOC, what are the top priorities right now in terms of pushing for lower emissions within ADNOC and kind of increasing the focus on sustainability?
So I guess maybe to just build on to what Matthew just said, it's going to take a lot of R&D and innovation in new technologies for us to propel our decarbonization targets forward. So to meet our 25% GHG intensity, we're looking at different levers of technology, be it energy efficiency, scaling up our CCUS. But it's a moving target, if you will. So we need to look at how we can, take this one step further. What kind of technologies and solutions do we look at, beyond CCUS, like low carbon hydrogen? At the end, it has to make business sense to ADNOC, but as well still maintain our position and our commitment to being a responsible oil and gas producer. So the sustainability function in ADNOC is placed under the technology group for that very same reason. So when we're looking at the climate change aspects and what kind of solutions and technologies that we need to consider, that's where the R&D capabilities and the digital capabilities of the technology group are harmonized with the sustainability mandates. So looking at capitalizing on the digital infrastructure we built, looking at how we can further optimize our activities and operations. We have our Panorama Digital Command Center, where we have an end-to-end accountability of our hydrocarbon streams, which means we can track our activities and operations and identify where we can optimize across our value chain. We're looking as well in terms of scaling up our CCUS technologies, leveraging partnerships and collaborations with industry peers, technology providers, and academia to look at how we can make that technology, whether it's CCUS or other low carbon technologies, more commercial and something that we can deploy at scale. And I think that's a lot of the challenges that we're facing now. There are technologies available today that are fit for deployment, but there are others that need further R&D and more research to look at how we can capitalize on those further.
And so, Matthew, from your perspective, I mean, we've talked about this before in a previous interview for Oil and Gas Middle East. I mean, what's interesting for a contractor is there's different layers. I mean, there's partnership with oil companies, and then there's also the internal sustainability measures for an EPC company. So can you tell me a little bit about the priorities for McDermott when you are pushing for lower emissions across the board?
Yeah, that's right, Carla. And we really tackle this in, I think, in two pieces. The first is what we are doing internally in our own operations, and then secondly, what can we do to support some of those next technologies that Samar was just talking about. And if I just quickly touch on both of those pieces, we recognize that as an EPC contractor, our carbon footprint or greenhouse gas footprint is part of the Scope 3 emissions of our clients. And so the first thing that we need to do is really get control of that, understand what our own greenhouse gas footprint is, both in our own owned activities, but also in our supply chain. And we're doing a lot of work really right now to establish all of the tracking systems so that we can track our greenhouse gas emissions right across our operations, right down at the kind of project level. For us, a lot of the emissions come from things like fabrication yards. We have one just down the road from where you guys are in Jebel Ali, for example. And we have marine construction assets, which consume a lot of marine fuels. And of course, we have our construction sites themselves, the onshore construction sites, which use diesel in their operations. And so really getting a handle on our own operations and driving initiatives to reduce those emissions, that's one part of it. I think the second part of that first section is really how do we design and build facilities with a lower life cycle greenhouse gas footprint. And we're doing a lot of work which we call facility of the future, which is how do you build today's technology, so today's facilities, but in a much more sustainable way, and where we can actually show different options to our clients to say, well, if you want to take CapEx carbon out of the facility or OpEx carbon out of the facility, these are the options that we can look at. And then I think, moving to the new technologies, we are looking at all of the technologies that Carla mentioned, at hydrogen, at carbon capture and storage, and a few more besides, including energy storage, sort of grid energy storage. And really our focus as an EPC contractor is how do we leverage our international supply chain, our fabrication capabilities, to be able to scale up these technologies and through that scale up and the access to the international supply chain, bring down their costs, which you know, as Carla mentions, we need to do to make these technologies competitive. So those are our two areas of focus: greening our own operations and supporting our clients as they move into new technologies at scale.
Liv, so obviously you don't operate within a producer or an EPC company. Your scope is a little bit different, but do you have anything to add in terms of maybe a broader overview of the priorities in the industry in terms of pushing towards lower emissions?
Yeah, I think, I mean, we heard what Samir and Matthew say, and it's really, it's very much aligned with our research and the study. It's approximately 15% of the global energy-related greenhouse gases comes from the process of getting the oil and gas out of the ground and to consumers. And of course, to work on reducing that is important. And Samara already mentioned about reducing emission, detecting methane leaks, and also efficiencies in the supply chains and the value chains. And then in the longer run, it's more about carbon capture and hydrogen. So yeah, very much aligned thinking there.
Yeah, and I mean, so the common thread obviously is, you know, we're not seeing oil and gas disappearing. It's still going to have a role. The role is just going to change, and it might be a drastic change, but you know, it still does have a role. So, what I'd like to know is, I mean, what are some of the major misunderstandings about the role of oil and gas in the energy transition? I think I'd like to start with Samar on this one. So, you know, what are some of the misunderstandings that you've seen about oil and gas in the energy transition?
I guess I'll touch upon the earlier point made in terms of where we see the peak demand going and what that future entails for oil and gas companies. Now, as you rightly said, and I tend to agree with Matthew here, there's still demand for oil and gas in the coming decades to meet, you know, growing global population and, you know, provide affordable and reliable energy supply, especially in developing areas of the world. And I think when we look at the energy transition and what it implies for the oil and gas is oil and gas being perceived as part of the problem, but they could also be very instrumental players in solving it. So as we continue to provide that energy supply to the world, we need to look at how we can do that responsibly. Now, obviously, there is no silver bullet to fix the problem. I mean, we all wish we'd have an infinite supply of energy with low carbon emissions, but the takeaway here is for oil and gas companies to look at how they can contribute to the energy transition, how they can transform their business model, be more resilient and adaptive to meet both their commitments to the stakeholders, you know, whether you're an IOC or an NOC, but also look at how they can, you know, protect the environment. How can they play a role in the decarbonization story? So adaptation here is key, and I think it's pretty much reflected in a lot of the commitments and strategies that you're seeing coming out to the major oil and gas players. So the recognition is there, and I think the next, you know, period is going to be critical for, you know, what direction each oil and gas company takes to be part of that.
Right, can I just come in and add something to what Samar said? Because, you know, I totally agree with what you're saying, Samar. I think the oil and gas community has a number of capabilities which, you know, in some ways are unparalleled globally, and if they're harnessed as part of the energy transition, could be, as you say, a part of the solution. So the ability to deliver very, very large scale, complex infrastructure projects globally, the very, very few organizations that have the capability to build, you know, infrastructure at massive scale, you know, whether it's oil and gas or low carbon renewables, and reaching around the globe. And just to have that network, that capability, that experience is something that we need to harness in this energy transition. And there are two, I think, very specific capabilities the oil and gas community has that really doesn't exist anywhere else. The first is the ability to operate offshore. I think our utilities have started to develop offshore wind near shore, but really the capabilities to deliver projects, very remotely, offshore wind projects, harnessing wind, strong wind resources way offshore is really something that I see the oil and gas community having a strong role to play in. And secondly, subsurface, right? Reservoirs, which are, and aquifers, which could be fantastic stores of CO2 in the future. Who understands those? Well, it's the oil and gas companies. So, I think there's three reasons there why there's a really, really strong role for the oil and gas companies as part of this transition. I think both in terms of scale and reach, but also in terms of technical competence.
Yeah, Liv, your take.
Yeah, no, I really support this for all the reasons that has been mentioned. But I think the biggest misunderstanding is that the oil and gas will not be there in the future, but there will be a lot of oil and gas. As I said initially, it will be almost half of the energy system, half of the energy sources. So that's a big misunderstanding. And also, in order to reach the climate goals, we actually have to work on that part of the coin to decarbonize that part of the energy system. And I think the oil and gas industry is really the one capable for that. And then, as Matthew said, there is an element of not in my backyard related to energy infrastructure. And I'm quite certain that more and more of that will go far offshore. And that is where the industry really have capabilities to deliver on. And of course, not to mention the storage of carbon. So yeah, I think we need to get our story right so that we are seen as an attractive and important player in solving this problem.
Yeah, so I think I'll stay with you on this, Liv, just touching on that last point. We need to get our story straight. So, what is the right role then for oil and gas companies when we're looking at the global effort to, reduce emissions, to battle climate change? What is our responsibility? What is the role of oil and gas in that fight?
I think that many of the oil and gas companies do the right things, set up very ambitious targets. But of course now they will be followed very closely to see that they deliver on these targets. And I guess the biggest challenge is actually the Scope 3 emissions, right? How do they tackle that? But I see now that there are, new partnerships evolving. Of course, one thing is that they are diversifying into these renewable energy systems, but it's also the element of becoming more the energy provider than the oil and gas producer, which then will give very new business models to cities and municipalities. So it will be interesting to follow exactly that Scope 3 emission target and how that develops going forward.
Samad, if I could just jump to you to hear your thoughts. What is the role of oil and gas companies in the energy transition and in fighting, climate change?
So I think I've touched on those points, Carla, but maybe I can just kind of recap again. Where it's understanding the organization's footprint in terms of carbon emissions, right? So internally look at how you can decarbonize your operations and activities. Look at how you can balance that with the strategic commitments that the company has, to different stakeholder groups. But more importantly as well is go beyond that and explore partnerships, with different industries, with different stakeholders, even with governments as well, to look at how they can capitalize on the oil and gas capabilities and the know-how to deploy, typically capital-intensive, technologies. And I think that's a point that Matthew made earlier on is, the infrastructure and that technical competencies and capabilities and skills are very much within the oil and gas industry. And that gives a huge opportunity for different stakeholders to actually come together and look at how they can be part of a bigger decarbonization picture.
Matthew, anything to add?
I think that I'll just add one thing, which is, I was reading in the newspaper last week, the CEO of Glencore had said something interesting about coal assets. He basically said, there's no point me divesting my coal assets if I'm simply going to divest them to somebody who's going to run them in a less sustainable way. And I think we all know the oil and gas companies. They've got strong brands. We know who they are. We know that they take sustainability seriously. I'd much rather that they were running, our oil and gas that we still need to have, globally, in a very responsible and sustainable manner, than that they were, for example, divested, went into the hands of potentially nefarious, owners who would have less, perhaps, ambitious goals around operating sustainably. So I think, these companies are going to be the responsible custodians of this important resource that we have, for many decades to come. And certainly I see my role in the supply chain to support them and in making those resources as sustainable as possible, while affecting this energy transition to new forms of energy. I will just make one further point, which is often missed, which is, oil and gas reservoirs don't just carry on having productive capacity, they decline. And so, even if there was no further increase in demand at all in have to invest to maintain the production capacities. So, there is going to be a need for new, even in a declining energy demand or hydrocarbon demand world, there still will need to be a responsible investment to maintain production capacity to keep the lights on, essentially.
Yeah, I mean, it's an interesting point that you make, especially about, the companies that are already custodians of this industry. We're definitely seeing more investments into sustainability and kind of diversifying assets. And I mean, both on the IOC and NOC level. So that's definitely an interesting point. I would like to go back to something that you mentioned, Samad, which is an important point. You mentioned that, you still have to balance between your commitments in terms of sustainability and, good business sense. Can you tell me a bit about that challenge right now? And, do you expect a shift in that, the relationship between sustainability and business sense in the future?
So if I put that in the context of ADNOC, it's when we talk about sustainability and business, that's pretty much something that we address hand in hand. It's integrated in the way we do business, in the way we make decisions, and mostly that's because the driver has been always through the founding father of the UAE, Sheikh Zayed, instilling these principles of sustainability and how we can protect and preserve our natural resources. So it is, I would not say these are, particularly challenging priorities. As I said, it's how we can continue to be a major driver to the UAE's economy and maintain that commitment that we have with different stakeholders, while maintaining our position as a sustainable oil and gas producer and maintaining sustainability commitments. So what it comes down to basically is in our strategic decisions and in how we decide to move forward as an organization, we look at the impacts on our responsibilities and our commitments for sustainability. And how we can continue to meet those goals while delivering value for our stakeholders.
And Liv, so from kind of the broader perspective, internationally or globally, is this a challenge that we're seeing, across oil and gas companies?
Yeah, obviously this is a challenge for many companies, I think, but it's also important to see that I mean, the growing awareness of the urgency and the magnitude of the climate change is increasing, and it increases the pressure on the oil and gas industry to decarbonize. I mentioned that the industry need to be attractive, not only for talents, but also for investors. So I think it is a kind of a longer term success factor for the sector that it is proactive and tries to be a part of the solutions rather to reacting on other stakeholders' pressure and society pressure. Yeah.
Matthew, do you have anything to add from the EPC side?
Well, I think what I would say is that while you may worry as an oil and gas company about the impact of getting involved in sustainability or energy transition on your profitability, I think you have, there's two things working with you as you make the transition. The first is that typically low carbon projects, and particularly renewables, have lower risk than oil and gas. So there's a lot of risk in oil and gas because it's a highly uncertain activity. You're drilling exploration wells, you don't know whether or not you're going to find resources, etc. So consequently, oil and gas companies have had a very, very high cost of capital, haven't had much debt in their businesses. I think as they move into lower risk technologies, there's an opportunity to change their capital structure, to take on more debt, to have a more efficient balance sheet and a lower cost of capital. That's a big transition to make, but it is something that as the percentage of renewables goes up in the oil companies' portfolio, they can actually start to shift the way that they structure their balance sheets. And I think secondly, and perhaps more importantly, the investor appetite for low carbon investments is enormous. So, what you can see is companies that have a higher component of green or energy transition technologies within them will enjoy a better rating in the market, a better valuation in the market. So while you may have to suffer for a short period lower profits, they will be valued more highly in the market because there's an anticipation of a huge growth potential. So I think two things working in your favor as you wrestle with this this balance.
So, I mean, we've been talking in kind of a positive light about the role of oil and gas and how it can contribute positively towards the energy transition. But what are some of the major challenges when we're looking at oil and gas moving towards a lower carbon future, and probably increase uncertainty in that future? So what are some of the major challenges? Liv, I'd like to start with you, and we'll move from there.
I think we touched upon some of them, but I think one of the major challenges is the big uncertainty. What to plan for, what to invest in, where are we moving, how is the technology moving, what regulations will be imposed on us. I think the uncertainty is great, and that means the business have to run to manage that uncertainty. But if more tangible thing, I think the scope 3 emissions really to be part of reducing scope 3 will be a challenge for the oil and gas industry, but maybe the kind of the most important now is not to be regarded as a sunset industry, right? To keeping modern in the minds of young people and investors, to use the right technology, be perceived as a positive force. That will be a challenge because there are very many critical voices out there.
Matthew, can I have your take? So what are some of the challenges? And since obviously you're working in an oil and gas company, as an EPC company, specifically, what are the challenges that you're facing?
Well, I must say, I was going to cut it two ways. Firstly, talk about the challenges of the industry, and then within McDermott. I think for the industry as a whole, to affect this change, I mean, I noted down three things. One is around cost, and the cost of these alternative energies, low carbon energies, it is still higher than the traditional sources of energy, and so that we need to ensure that somehow the price of carbon, the price of the cost of greenhouse gas emissions is effectively worked into markets, so that we can kind of, that the low carbon can compete. I think, the second one I was going to say was customer acceptance. Wherever it is, whether it's, somebody getting used to using an electric vehicle and charging that, or to having hydrogen blended into their natural gas that comes into their home or whatever. There's a lot of work to do on customer acceptance of some of the new technologies. And I think one of the other points I was going to make on the energy transition was around volatility and intermittency of some of the renewable energy sources, and we need to make sure that we have ways of dealing with that volatility and intermittency in our energy systems. Just in terms of the challenges internally, for example, an EPC company to really drive forward its sustainability and energy transition strategy, I would say not too many challenges. Once you've made the commitment to start thinking about this, the fact you get such a strong resonance with your customers and your shareholders, and most importantly, as Liv was saying, with your employees, particularly the younger employees, I think it almost feels to me, and I'll be interested to see whether Samar has the same feeling inside ADNOC. You just have to somehow catalyze the debate or the initiative, and then you just see this kind of upswelling of interest and activity and enthusiasm, and a lot of people giving their own time to these initiatives, almost outside of their day jobs, because they want to personally contribute and make progress. What I've seen in McDermott is actually it's been like lighting a spark, and just then all of the energy has kind of come out of the organization to start trying to address some of these challenges.
And Samar, what your perspective from the NOC side?
I tend to agree with the points that Liv and Matthew mentioned, and I mean, when it comes to the potential cost of these different abatements and decarbonization strategies, right? What does that mean for the organization's bottom line, or what does the future look like for an organization? So you see a lot of oil and gas companies, divesting away from their core oil and gas business and moving into different energy landscapes. So if that makes business sense or not. When we're looking at the cost of some of these low carbon technologies, I think there's a lot of work that still needs to be done to make these commercially viable, so that they can be deployed at scale. And when it comes to, Liv touched upon, the kind of younger generation, and Matthew touched upon the customers. I think the challenge here is we have a variety of stakeholder groups, and how we manage the perception of each of these groups it can be a balance act, if you will, right? So we have the pressure from the investors, looking at how we can accelerate our efforts in terms of decarbonization. What are we doing in terms of sustainability, in terms of how we address the climate change aspects. And then you have a younger generation who is equally kind of excited to see, or looking at how the organization is demonstrating its commitment, right? So how are we translating these commitments to actions on the ground? And then you have the pressures as well from your government, your customers, to meet energy and supply and demand. So it's a balance act, if you will, to look at how we can strategically harmonize all of these perceptions and expectations from the oil and gas, but keeping the goal in mind at the end is how we can adapt to this energy transition. And I guess maybe one point I can add to that, maybe looking at it from a different angle, is the opportunity here is for the oil and gas companies. Obviously, doing nothing is not an option. Oil and gas company, whether you're an IOC or an OC, recognizing that you will be impacted by that energy transition, but then looking inward at how you can transform your business model, how you can maintain your resilience, given that this is a very changing and dynamic landscape. There's a lot of volatility, as Matthew mentioned. How can you kind of foresee these risks, and how can you integrate that resilient and adaptive approach, looking at how you can ramp up research efforts, looking at not just low carbon technologies, but focusing on other uses or non-combustion uses of hydrocarbons, which takes us to the scope 3 space as well. So yeah.
So, you did mention for the pressures and kind of conflicting pressures from government, from stakeholders, from all of these different sources. And that brought to mind one topic that came up in our first panel of the day, which was about OPEC. Something that a few of our speakers did mention was that the oil and gas industry may be unfairly scrutinized or overly scrutinized, and that CO2 specifically is overly scrutinized as as a GHG, where there are other sources that are maybe not being noticed as intensely. I'm curious to hear your thoughts on this. I think specifically, Liv, from kind of the research perspective and with this outlook that you develop every year. Do you think that's the case? What is your take?
I think maybe right, maybe wrong, but I think maybe it's forgotten the positive effect that natural gas has in the energy transition. So shifting from coal and partly oil over to gas, the importance it has to air pollution and air quality we've seen in the East. I think that's really a positive development. Okay, so maybe realizing that in the energy transition, maybe we're not able to solve all the problems in one, but have to go a little bit step by step and take several transitions, from coal to gas and then to hydrogen to electricity. So I think maybe that's also one of the misperception that there is one big energy transition, but actually there are many transitions, and the uptake of especially natural gas is important with respect to air quality and then quality of life.
Anything to add, Matthew or Samar?
I'll just say, that this is such a big issue, and with such potentially calamitous consequences. I think we do need to look at all of. I don't think that oil and gas companies should hide from the challenge they're getting. In fact, I think it's good for us that we're getting this challenge. But I do think we should look in other areas. And I want personally that I'm always very, very kind of concerned about is how are things like deforestation and why we don't spend more time internationally talking about carbon sinks and how they're being affected, for example, by forestation. And actually, just as a sidebar, I actually do think that it's quite interesting that oil and gas companies could have a role in afforestation projects, because it lends itself to companies with big reach and the ability to organize projects over international distances. But no, I don't think we should hide from the challenge, but I think we also need to look as a global community into other areas as well where we can help ourselves in this energy transition.
Okay, well, I think that's all the time that we have. Thank you all for joining me for this discussion today. Obviously, this is a very big topic. This is a very big conversation. As some of you have noted, it's a moving target. It's going to keep changing. I think for me, the key takeaway from this conversation is we are trying to contribute to that positive change. How we do that will continue to shift. And truly, it will be fascinating to see how the energy transition intertwines with the oil and gas sector in the future. But for now, thank you for sharing your expertise on the subject, and thank you to all of our viewers for joining us today. We will share your questions with our speakers, so make sure to check our website for the answers and to watch and share the panels from today.